And that's basically what these gold and silver markets are. The gold and silver markets run by London and New York, the banks. In my opinion, they're bucket shops. And yeah, one day, um, someone big will ask for delivery, and yeah, like you saw earlier this year in January, the spot settlement for the LBMA gold was 4 to 8 weeks.
Mario Innecco 64 YouTube channel. How are you, my friend?
I'm well, Andy. Nice to meet you for the first time.
Yeah, nice to finally meet you. It really is. Pleasure is all mine. You have some great insights specifically that I agree with, but I want you to discuss them with me about precious metals, where we're going, where we're at, and where we're going. But specifically, I wanted to talk about silver. So let's start with that. What's going on in the silver market, in your opinion, and where are we headed?
Yeah, I mean, silver. If you remember well, back in 2021, there was a silver squeeze, and silver traded up to 30. And a lot of people were excited about that. They thought it was going to break out. I was a little bit skeptical because I've seen for over 20 years how the futures market can be kind of manipulated by the bankers. So yeah, we've been waiting a long time for silver to finally break above 30, and I think it looks really bullish. So we had resistance around 35 a few months ago that we broke, and that's the technical picture. And right now it looks like 40 is the next target, and yeah, they're trying hard to keep it from going towards that level, but I think eventually it will. On the fundamental basis, I think that the fact that we have a silver deficit that has been running for like 5 years. There's not enough silver being mined and produced to to match demand. That's very bullish, and the fact that countries like China and India need a lot of silver, not just for investment purpose, but also for building their infrastructure. Yeah, it makes silver, in my opinion, probably one of the most undervalued assets on the planet. If you think of where silver got in 1980 and even 2011, we're still not even there. Yeah, so I think the most important thing about silver is being patient. And I think patient will be rewarded. And once silver breaks through $50, which is like the line in the sand, we could see yeah, fireworks in silver, and also the silver miners. I think they're looking really good as well. Even though I focus on having physical silver as well, but silver miners I think are going to be a really good way to be exposed to this move. And yeah, they're showing signs of life.
Yeah, they really are. And I agree with just about everything you said. But if you could work out with me, why do you think we'll see fireworks after 50?
Well, just because it's such an important technical level, that once it breaks through there, I think it's going to be unknown territory. If you can picture the long-term chart of silver going back to the early 70s, it's a huge teacup and handle formation, and those are quite rare, and especially uh, a multi-decade one like silver. And I think Jim Sinclair, he was the first one who uh, talked about this. Well, that I first heard about a teacup and handle formation, and we had one in gold back in the early 2000s, and it had formed from 1996, I think, or 97 to 2003 and four. And once we broke that, the top of the teacup, I think it was '05 or '06. I don't remember the exact date. but and it was around 430 dollars. Yeah, gold took off, and in 3 or 4 years, it was trading up to 1,000. That's why I think the teacup formation, basically, it's like a pressure cooker, and it's been kept down for decades. And once it breaks through that level, that's why I see like that's why I see fireworks happening.
Yeah. So talk to me about that. Talk to me about what they're doing and define who they are doing to suppress the market, if you would. And why is it, I guess, why is there so much fear, if you would, in letting it rise?
Well, who they are, I guess it's the bullion banks, and they work for the central banks basically. I think the central banks are involved, even though they don't hold much silver, and I think they're they don't like silver up so much because if you look at historically, silver, even up until the early 70s in some European countries, they're still using silver as money, coinage. And in the US until 1964, uh, Switzerland till 1967, I think. In the UK, we got off silver a bit earlier. It was 1947 because the UK was bankrupted really by two major wars. But yeah, and I think they don't want the public to get involved in silver because it's kind of in our DNA, and loads of words, well, words for money in different languages uh, is silver. Like in French, it's argent. In Spanish, it's plata, and even the word dollar comes from the Spanish mil dollar, which came from the Joachim's Thaler silver coin. So I think that's why they're concerned, and a lot of times they also want to maintain the market volatile because that puts a lot of investors off. They want to make it so that it's just like a volatile commodity, and that was one of the strategies that they basically installed when they the let's say when the U.S. allowed gold to be legal again on 1st of January 1975. There's a WikiLeaks document uh, where the Treasury and the Department of State communicate with bullion dealers in London, and they say, yes, it's good that we're going to have a futures market for gold because it's going to keep the markets very volatile, and it's going to keep the public from demanding physical gold. And it's the same thing for silver. And I don't think they're going to make it though, because the debt situation is so out of control that I don't think the dollar or all the other fiat currencies have much time left. And I think they know it, these bankers, even though Ben Bernanke seemed to play dumb when asked what gold was by Ron Paul. He said it was a addition. So that's why they try to keep things like under wraps, under control. But the bankers might. You can't count them out. They might even reverse their short positions and go long silver. Who knows? They usually end up doing really well no matter what happens.
Yeah, that's the truth. It's one of the reasons too why, and I do think this time is, and it's pains me to say it, not pains me to say that because I never think this time is different, but I think this time is different. If you would. But talk to me about some of the ways they suppress it. Do they just forward sell in the futures market? And then if they do that, what is keeping away some very large investors or central banks or funds just from buying in the futures market and taking delivery?
Yeah, I mean, I worked in the futures market for like 20 years. Uh, mostly government bonds and interest rates, but I got involved in other kinds of futures, and I can tell you that someone comes with a big order, they can move the price quite sharply, and especially in silver, because silver is not really a very deep contract, as deep as gold and other futures markets. So these guys know the price levels, the supports and resistances. And yeah, when the market gets too frothy, they'll come in and sell like 1,000 futures of silver, which is big. Prior to let's say the early 2000s, it was a bit more difficult to manipulate the futures market because all the trading was done on the floor, and people could see who was doing what. You could see if JP Morgan or the broker that JP Morgan used was selling or not. But uh, the market went electronic basically by 2004 or 5 or thereabouts. Futures were all traded electronic, so they can hide behind that, because when you sell or buy on the screen, it doesn't show who's doing it. And the other thing they've done and they've been fined for doing is spoofing the market. That means you put a huge offer on the screen, and then you pull it. But the reason you put the huge offer is to scare people off from buying, and it actually might trigger some selling. um, yeah, the people in the bullion banks, they say that they don't really go short. It's all hedging, but I think yeah, I don't buy that, and I think a lot of times they also front run their big clients. If a big hedge fund comes and tells a bullion bank, I want to sell 1,000 silver contracts, they'll sell as well. And then, you know, I mean, when I worked as a futures broker, I always tried to work the orders so I wouldn't move the market in a prejudicial manner for my client. And that means, you know, if he gave me a big order to sell something, I would work it. I wouldn't try to smash the price, but that they do, you know, and they seem, you know, back in 2021, that's what they did when we got up to 30. And even the head of the CFTC came out and said, well, we had to tamp down the demand, you know, and yeah, they basically smashed the futures at the 30 level. And yeah, I mean, it kept silver from rising for like 3, 4 years, really definitively. So that's what happens, and it happens in gold as well. It happens in other markets too. But when it happens in other markets, the regulators really come and clamp down on the people who do it. But with gold and silver, it seems to be rare that the regulator does anything. If anything, they do it when the market is going up a lot, just like we saw with the Hunt brothers in January of 1980. They banned people from buying silver futures because they lost control of the market. So that's yeah, the CFTC. They're not there to. They're there to protect the bankers. These regulators.
Yeah. So you mentioned a lot of things that I want to touch on, but first of all, I want to work this out a little bit more. How short uh, do you see, I guess, the market? And do you see just a few years ago, it happened on the LME with both nickel and I want to say palladium, correct me if I'm wrong. You had just this huge serve in the metal markets in London because they didn't have the physical product. Do you
Yeah,
see?
that was
Go
yeah,
ahead.
that was Innecco in 2022. I think it was triggered by the you know, the war in Ukraine, and yeah, there was a huge short squeeze, and they canceled trades. But yeah, recently I spoke to David Jensen, and he said that on the LBMA, platinum right now, there's almost no platinum, physical platinum in London, but they still trade like the equivalent of 3 million ounces daily. So as long as people don't ask for delivery, this kind of it's like a bucket shop. I don't know if you know the
Yep,
term, you know,
I do.
like Jesse Livermore used to.
Different Lismore, yeah.
Yeah, he used to bet on the prices, and that's basically, and he didn't actually receive the shares when he did that. And that's basically what these gold and silver markets are. The gold and silver markets run by London and New York, the banks. In my opinion, they're bucket shops. And yeah, one day, um, someone big will ask for delivery, and yeah, like you saw earlier this year in January, the spot settlement for the LBMA gold was 4 to 8 weeks. Basically, they didn't have the gold to deliver. They said it was too heavy and they had problems moving it. But the other thing, Andy, is that they can always just close the exchange and declare force majeure, or say that they have the wherewithal to change the rules and say you can't have the silver or you can't have the gold. You get cash settlement. So that is possible, but then they'll lose a lot of credibility as an exchange. And I think that's happening on COMEX and LBMA as well. And I think the price discovery mechanism is moving more and more towards the east. And by that, I mean like Shanghai, Hong Kong, even Moscow, they have physical exchange. And I think they've opened another one in St. Petersburg, Dubai. So that's the way I see things going.
I'm glad you brought that up. I 100% agree with you. I was talking to Andy Scheckman about that, and we see this flight from physical product from the west to the east, if you would, on those exchanges. It's an interesting arbitrage to somebody with really deep project products. You can take delivery over here and potentially arbitrage it over in Shanghai or Dubai or Moscow or wherever. Let me ask you. You mentioned fiat. You think silver and gold are potentially, well, you didn't say that. You said fiat will more likely, this is the end of fiat. What did you mean by that? And what would and I'm paraphrased, but what would replace that? What do you see replacing that? And do you see crypto at all, being in that equation? Or do you see it just going back to the metals or maybe some kind of metals related to crypto or whatever?
Yeah, I mean that the system is long in the tooth. You know, Friday is the 54th anniversary of when Nixon uh, uh, closed the gold window or suspended the convertibility of the dollar into gold temporarily. And it's been a massive increase in debt, financialization, derivatives. It's all mushroomed so much that I think these guys know as well that you can't keep this going forever. And I think they do want to bring in some kind of digital currency. The Europeans are more into the CBDC. In the US, it seems to be more through the private sector and crypto. And I think crypto has been kind of an experiment. It's been portrayed as a grassroots movement to fight the bankers actually in their system. But now all the bankers and even the Trump administration, they're getting involved. So it's been hijacked, or maybe it was created by them uh, to use it as a solution to the collapse of fiat. Uh, yeah, and I think they do need gold and silver if they want to get back up and running, because if you just bring in fiat, not fiat, but if you bring in digital currency or CBDC with no backing, with just the same old, let's say, government debt backing, I don't think that will work. So they will have to resort to some kind of commodity money. And I think the BRICS countries, especially Russia, China, and other countries, they've been buying a lot of gold since 2022, and because they see the writing on the wall.
Yeah, it's really a fascinating time here, and I don't know exactly what it looks like with the outcomes. All I know that the system is indeed broken here, and it's broken and it's unfixable, if you would. But I don't know exactly what the outcome uh, really, really, really looks like. Talk to me a little bit about the BRICS nations, if you would. Is that more or less, is that a currency play, or is that more of a trade union, if you would? What do you think that is? There's a political meaning for trade, or is it there? Yeah, just talk to me, work that out a little bit for me.
Yeah, I mean, I think BRICS is a response to the uh, the West's like imposition of let's say sanctions, tariffs, and yeah, to the control of the monetary system by the U.S. through the petrodollar, and also the EU with their sanctions, and especially with what happened after 22 in Russia. And I think I don't really think they're pushing, they might have some kind of currency. I don't think they will, though, because it's such a, they have such different cultures within the BRICS, different kinds of economy. I think what will happen is that they will have their own like trading system where there will be a common reserve that they will use to settle like trade at the end of the year or whenever. And by that, I mean if Brazil has a surplus with China, uh, and Brazil's holding yuan, they might want to convert some of that into gold, or they'll just keep the yuan and vice versa. And it's just like cutting out the middleman. They want to cut out the West. And I don't think they're, I mean, politicians, especially President Trump now, they've been quite aggressive in terms of what they say about BRICS. They say BRICS is anti-American, anti-dollar, but I don't think they are. They just want to be more independent and not have to be at the mercy of someone else's currency, especially if you're dealing with someone, let's say Brazil and China again. Why do you need to use dollars? Why can't you use the Brazilian or the Chinese currency? That's how I see it. And I think gold is going to be a very important part of that because you can't really trust the BRICS fiat currencies either. I mean, look at Brazil, where I'm originally from. I think in the 70s and 80s, we had 4 or 5 new currencies. So it can only work if you go back to gold because the dollar worked for a long time because up until 1971, it was as good as gold. So I think that's what BRICS is all about. And I I see going forward the whole world being kind of like BRICS. It's going to be a more of a multipolar world, as they say it. And I think it's even better for the US and the dollar because to be the major reserve currency has a lot of advantages, but it has a lot of disadvantages as well, as we've seen in the last few decades. The country's up to here in debt, huge deficits. The middle class has been eviscerated. It's been deindustrialized because other countries have to uh, earn dollars. So what they've been doing is trying to sell as much stuff to the U.S. as possible to earn those dollars to function in the world. So yeah, I actually think it's a positive for the whole world. The fact that this is happening.
Yeah, I'm glad that you said that, and I have a theory, and I want your thoughts on that. my theory is that things are actually getting smaller, much smaller. The nation state, and I don't know if it'll happen in my lifetime, but the trend is that it's going to be going away because it's really not needed. And I would agree with you that this is a big positive for the US, but not only for the US, for the rest of the world. And it's promotes competition in the sense of you better have your countries wherever they're at. You have to have your financial house in order, if you would, and compete with another country to actually have competition with a currency, if you would, and money flowing into that country. The more disciplined that country is, the more money flow and the stronger the currency will be.
Yeah, no, I agree. It's just like within a domestic setting, if you have loads of inflation, the economy will collapse. It's the same thing internationally. If you can't trust a country because they will print a lot of money, they will uh, increase the money supply, and they'll also have profligate fiscal policy. No one will want to deal with that country. So I think the fact that gold can act as like an anchor for that is really good. But we need to see whether um, the leaders around the world really get some religion, so to speak, and become more disciplined. Because as Alan Greenspan actually wrote in the 60s, he said that statists, they they hate gold because it's a straitjacket. But the thing is, we've had this for over 50 years, this system without an anchor that um, I think they'll be forced to go back to something more sound and sane, and that's why I'm quite optimistic uh, going forward. And by that I mean not 5, 10 years, but the next few decades could actually be quite 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 good for the world, like a golden era, uh, which
Pun intended.
yeah, unintended, yeah.
Yeah, no, thank you. I would agree with everything that you said actually right there. Let's pivot a little bit to the miners here. The miners have had a good year, but I don't think the party's over, if you would. I think it's only just beginning. I think there's significantly value, especially with the producers. Well, there's significant value up and down the food chain, if you would, with the miners. But what's your thoughts on the miners? Is this it, or do you think they'll be catching up? Because you've had a huge explosion in the price. Oh, not huge, but a good price on gold. It looks like we're seeing that in silver now, but the miners have lagged. What are your that?
Yeah, like you said, they've done well this year and they've outperformed, I guess, bullion, gold and silver. But they lagged for so long that if you look at the long-term charts, I think one of them that's really still undervalued is the XAU or the Philadelphia Gold and Silver Index to gold. That's still like at 7%, or I'm not sure exactly where it is, but historically, even in the 90s when we had a bear market in gold, that ratio was like 20 to 30. So there's still a lot of potential. And also, I think the market is more concerned about AI and tech still, and they don't see the undervaluation of the miners. But if the gold price stays around where it is, doesn't even have to move up. And even silver, I think by next year, the price earning ratios are going to look really cheap, like below 10. And I guess the algos and people involved in value investing might see that. So yeah, no, I think there's huge potential for the miners. And usually, if you look back in the bull markets like in the 70s and in the 2000s. The miners, they catch up more towards the end, and sometimes they even keep going up after gold tops. I think in the early 80s, uh, the miners were still doing quite well in 81, 82. So yeah, I think it's a good place to be for people who might not want to have bullion because that could be not as safe to keep. But yeah, it's a it's a tricky game though, but because you need to also get out at one point and take profit because these companies are very cyclical. But I still think like you think that it's early days.
Totally got it. Mario, let me ask you this. What are your final thoughts, or what would you, that you can give to our viewers to look out for over the next coming weeks and months, and maybe through the end of the year until I hopefully have you on again?
Yeah, I mean, keep an eye on what Trump says about Jay Powell, the chairman of the Fed. I think today, as we speak, he's come out again and saying that he should cut rates now, that he's been too slow. And what I noticed when he said that is that, for example, the 30-year yield just spiked higher. It's up 6 basis points at 490. Also, the 10-year is up a bit. So, yeah, look out for the bond market, especially the long end. I think we could see higher yields only because Trump wants the Fed to cut aggressively. And despite that, he says that the economy is doing great. So it seems a little bit weird. But I think the reason he's saying that is because there's $1.6 trillion of new that the Treasury has to issue until the end of the year. And I think the Treasury now is going down the Yellen strategy of issuing short-term paper. So the reason Trump wants these cuts is that then they can issue short-term T-bills and save a lot of on the interest expense. So yeah, watch the bond markets because they're really important, and I think they could come under pressure in the next few weeks and months.
Got it. Mario, it is an honor and a pleasure to have you on. I'm a fan of your content. If people want to listen to you or do business with you, how do they do that?
Yeah, I post a video, well, every day on YouTube. My channel is at Manco64, and I'm the home of alternative economics and contrarian views. And I've got my mascot Rudy as well. And I'm also on X. And be careful there because there's some impersonators. I've got about 27,000 followers at Manco64 on X.
Excellent. I will link to all of this in the show notes, both on YouTube, Spotify, and Apple Podcasts. And I will also put this out on LinkedIn where I contacted you, and X as well, and tag you. I want to thank you so much for your time, Mario. You're very gracious. You've been very gracious with me.
You're welcome, and it was great speaking with you, Andy.
Yeah, absolutely. Thank you. Have a good day.
You too.